Hey, everybody. Welcome back to the Real Deal Pod with Jeff and Alistair. I believe we're at what, episode eight? Or are we episode
Episode 8, lucky
We're at
number
episode
8.
eight, man. Holy lucky number eight. Wonderful for us. Wonderful for us. Well, how you doing, my man? How's the past little couple days been going? I apologize again to everybody. Just so you know, I am the reason why we're shooting this on a Friday as opposed to a Tuesday. I had some family stuff over the past little bit, so I'm the reason why this is shooting late. Apologies. So Jeff, hit it, man. What'd you get up to this past week?
You know what? Trying to enjoy this weather. I'm trying to be a great neighbor. I mowed my lawn for the very first time, and I make it a habit to mow my neighbor's lawn every time that I mow mine. So you know what? They're an elderly couple, and it takes me maybe 10 minutes longer. And boy, you know what? They are just so excited. I get jam, I get bread. They make me their second son, so it's well worth the energy and time. But
For
my
10 minutes? That's well worth it, man. For 10 minutes, you feed me. I'll do 20 for more food.
I would encourage everybody this year, if you have a neighbor,
Yeah,
mow their lawn, and you will be pleasantly surprised on the gratitude that you're going to get back.
that's awesome. That's
Yeah.
fantastic, man. That's wicked. I'm glad you do that. That's wicked. That's wicked. I myself, yes, I'm late on this pod because I've been at track and field competitions this past on Wednesday. My daughter Lizzie had her track her city or the district city, whatever the first one is, and then the next one is district next week. But congratulations to my girl. She got a gold in the 200, silver in the
Wow.
100, and gold in the 4x100. So she was an absolute beast. So my good on her. Congratulations, Elizabeth. My son was yesterday. He had his track competition yesterday. Gave it his all. Unfortunately, he did not medal and was extremely upset with himself and should not be. He ran an amazing race. And today, actually, this morning, we had his ultimate frisbee. It is the districts right now going
Nice.
on. So I'm actually speeding out after this pod. I watched two games this morning. Great job, Case. They went 1-1, had their second game at 2 o'clock. And then if they make it out of there, they're in provincials. So
Awesome.
it is, yeah. And then all next week is track again. So we may be shooting late. Everybody, again, apologies, my fault.
Well,
But
I think it's important to know, or people to know, that they come from good stock.
right.
Alistair, you played university football, wide
I sure
receiver,
did. I
wide
sure did.
receiver.
Played for the University of Manitoba.
So you know what? I'm not surprised they're speedy.
Oh man, they are fantastic. But you know what the great thing is, again, they're great athletes. Watching them cheer on their teammates is actually my favorite part because that's one of the things that I used to pride myself on and something that I make sure that I pass that on. And so the way they encourage their teammates, it's awesome. So
Yeah,
yeah, man.
100%.
So let's
100%.
get into it. What do we got today? I think we're talking about stated income, which is super important for people like us who are self-employed and
Yeah.
all that sort of good stuff. Yeah. I
Yeah.
mean, yeah.
Well, here's the deal. When we are self-employed, and that's self-employment is being a sole proprietor, in an incorporated business owner. The reality of it is as a self-employed person, we are not reporting a lot of income because it's a tax strategy to prevent paying a lot of personal tax. So what happens is that when you are self-employed and you are working, say, with a tax accountant, and you are having a great business, but you're not reporting a lot of income, it's really hard to get qualified or to get a mortgage with a lender, because as we've talked about, you need $30,000 of income to borrow $100,000 of money.
Right.
So when you're self-employed, and you're reporting $40,000 of income, but say your gross business revenues are 120,000 or north, or say you're reporting $60,000 of income and your gross business revenues are like 300,000. At the end of the day, as a business for self person, you're often hearing when you go to a bank or a credit union, you know what? You're not qualifying because you don't debt service, which we jumped a little bit into last week, right?
Right.
And again, remember that debt servicing means how much income do you earn to how much is allowed to go towards your gross debt servicing, which is all your property expenses. Again, remember, based on your credit score, it's anywhere from 35% to 39% of your income,
Yeah.
to what your total debt servicing is. And again, depending on what your credit score is going to be anywhere from 42 to 44% of your income. But again, when you're self-employed and you're reporting very little income, we are hearing often when you're going to your bank or credit union, you just don't qualify.
Right. Right.
So what is the solution? Right?
It's a solution. Exactly.
And the solution is this, and this is where I go back to a comment that I said before, is like, if you have a great job, you have a great income, you have very little debt, and you have a strong down payment. I jokingly said my 9-year-old kid can do your mortgage. They're honestly, guys, they're that easy, right?
Yeah.
When you're self-employed and you're not reporting a lot of income, and maybe you're even credit challenged, this is where you need a true mortgage professional to navigate you through those rough waters. Because at the end of the day, there are two ways to qualify for a mortgage when you're self-employed. And those ways are, is what have you been reporting for income for the last 2 years?
Okay.
And then the other way is stating your income based on your gross business revenues.
Okay.
Right?
Right.
And when you have the ability to state your income, you have the ability of qualifying for a mortgage where you would not qualify for it when you're looking at your 2-year income average as far as what you're reporting to Revenue Canada and paying tax on.
Right. Okay.
Right. So with banks and credit unions, just so you know, you can state income, but again, they make it very, very difficult as far as to get that type of file approved. And it's not impossible, but again,
You mean banks making something difficult? That never happens. What?
pretty much.
Come
But it's shocking, Alistair, that on how many people, be it bankers, be it brokers, they don't understand stated income, or they don't even not necessarily understand it. They don't even present it to self-employed people.
Well, that's what I was gonna say. It's almost sometimes I feel like they don't even try to understand. I think that's the best way to put it. Even sometimes it's like they don't even try or want.
Well, they don't get it.
Right. Right.
Like I said, they're looking for those AAA files where, hey, I have a great salary job, I have no debts, I have a strong payment. Hey, you're approved. It took me 3 weeks to get you that approval, where it should really take you 4 hours. But you know what? If it's outside of that box, now all of a sudden you're self-employed.
Right. It's
all of a sudden,
it's not low-hanging fruit.
Yeah. All of a sudden you're not reporting enough income.
Yeah.
All of a sudden, maybe you have some credit issues. Now, all of a sudden, you're not approved because you're not reporting a lot of income. And again, I think this pod is so important for anybody that is self-employed. When you are hearing that, hey, you're not getting approval because of debt servicing and or you're not reporting a lot of income, this is a must listen.
Well, that's what I was gonna say. That's why I was so excited for today when we were talking about like which one are we doing today. We had a choice between two, and this is the one we landed on because for me, this is the one that I think is so extremely important. Just so unbelievably important, especially because more and more people now are becoming entrepreneurs, right? As opposed to working within various different companies. So this is going to be a position they're going to be in at some point within their lives, right?
Well, and I believe the statistics show that 3 out of 10 Canadians, 30% of us are self-employed.
Right. Yeah.
And again, like I was saying, the whole idea about being self-employed, or not the whole idea, one of the ideas is having a great business, and in doing so, reporting as little income as you can as a tax strategy about paying personal taxes. Right. So when we're talking stated income, it's really, really important that to understand that banks and credit unions do offer a stated income program. Okay. Now also understand, if you are working with a bank and or a credit union, that stated income program is going to be insured by either CMHC, Sagan, or Canada Guarantee. Remember, there's three mortgage insurers here in Canada.
Right.
Now,
And make
also
sure
keep
you're
in
not
mind,
using Jeff, that the person you're using knows that there's three, because I've had my own personal experience with a client that they were using a bank that did not know that there was three different ones. So I'm just
yeah,
saying, make sure that the person that's representing you knows.
exactly. So again, here in Canada, we have three insurers, which insure any type of mortgage that you have less than 20% down, or it can insure a mortgage that's less than $1 million and using a 25-year amortization. But again, when you are stating income, banks and credit unions are able to do this for you, but they are insured. So the important thing to understand is, when you are working with a bank or a credit union, and they are trying to state your income to qualify, or you're asking, hey, have you thought about stating my income to qualify? Remember, you have to be self-employed in order to state income. It's really, really important to understand that that property that's being purchased has to be less than $1 million, right? And again, with stated income, you have to put a minimum down payment of 10%. So that is two things to understand.
Right.
The other thing to understand is, typically you have to be self-employed for a minimum of 2 years. Now, CMHC has a simplified program, whereas if you've been in business, or sorry, if you've been employed for 2 years in that same industry and now you're newly self-employed, they can basically help you and assist you. Other insurers, Sagan and Canada Guarantee, may make a condition that you are self-employed for 2 years, but still able to state income.
Okay.
The other part of this is that you have to have a credit score of 700 plus. Again, with a bank or a credit union. The other part of this is that you have to have solid savings, because again, if you're stating income as a tax strategy, and you have all this extra income, do you think your debts are going to be high? The answer to that is no, right?
Yeah.
So again, your credit score is very important, and also your debt load has to be very important, and also your savings have to be very important, because again, if you are stating your income and reporting less than what you're actually earning, in theory, you should basically have lots of money in the bank, and you should have very little debts.
Yes. Yeah.
Now, stated income, again, to be fully transparent, when you are working with a bank or credit union, it is a little bit more challenging.
Okay.
So a lot of times when we are working with business for self people, and say, for example, they have 20% or more, we can then transition into utilizing a B lender, or what they call a subprime lender. So we use these types of lenders for self-employed people when at times they're being credit challenged, right?
Yeah.
Or at times when they may own multiple properties.
Yeah.
You ever hear the saying, Alistair, is like, how did my neighbor buy 9 properties or 6 properties and basically is only reporting $70,000 worth of income?
Yeah.
Right? Like, how come they can do it and I can't? Well, quite often they're going to be self-employed, right? And then the second thing, they're using B lenders and not banks and or credit unions.
Right.
And thirdly, they're stating their income based on their gross business revenues versus using their reporting income.
Yeah.
Right.
Yeah.
So again, anybody out there is scratching their head and say, well, how is my neighbor doing it? If he's self-employed, he's probably stating income with a B lender to do it.
Yeah. Yeah.
So when we're working with a B lender, again, if your credit isn't where it needs to be, or you're getting declined stated income with an A lender because the credit isn't where it needs to be, we can shift the sandbox and go to a B lender. Quite often when we're stating income with a bank or a credit union, they will never allow us to state the income 2 times as far as what they're reporting to Revenue Canada on their line 150. And quite often we have to state the income much higher than twice report, or 2 times of as far as what they're reporting to Revenue Canada. For example, if I'm reporting $50,000 and paying tax on that, with a bank or a credit union, you can't state more than 100,000,
Okay.
right? So with a B lender, if we need to state it more than double than what you're reporting, then basically again we shift to a B lender, right?
Yeah.
B lenders aren't going to necessarily take a look at your utilization of debt, like how maxed out or how unmaxed out you are. They're not going to take a look necessarily on how much savings that you have in your bank account,
Yeah.
right? Do keep in mind that if we are working with a B lender, you need a minimum of 20% down. And what we then do is we take a look at your last 12 months of your gross business revenues. And then we take a look at your expenses. We do simple math. And then what is left over is what we state the income to qualify.
Okay. Now, do they ever like in terms of factors that fall into whether or not you're going to get approved? Is the property one of them? Like, does the property play a part in approval?
Yeah, 100%. So again, when you're working with a B lender, a subprime lender,
Yeah.
the property is very important. So where is that property located is also going to determine how much you're going to have to put down. So remember, when you're using a B lender, you have to put a minimum of 20% down, right? If that property is, say, in Terrace,
Right.
all B lenders aren't going to go up to Terrace, but there are a few B lenders that will go to Terrace, which allow us to state the income. But maybe now your down payment is going to have to be 25, possibly 35% down.
Because
So
they don't understand, and this because they don't understand the real estate market in Terrace, right? So in terms of if you default on your mortgage, they are not 100% sure they'll be able to get the value back for their lend.
it's the marketability is that if there is a sale that has to take place, what is the likelihood of that sale happening quickly in an area where the population is less than 20,000 people, right?
Yeah.
So it's also very, very important, like to answer your question, is your down payment is dictated as far as where that property is located. If we're talking about, say, a townhouse here in the greater Vancouver area, your down payment's going to be 20 to 25%.
Yeah, and
You're
you're good with approval. So you're
Yeah.
pretty don't have to worry about your approval.
If you're talking about a house up in Terrace, British Columbia, to state the income, that lender may want 25 to 35%.
Right.
Right. So again, it all comes down to marketability.
Right.
Right.
Makes sense.
So I'll give you an example. I was working with a lawyer. We were working on a file, had great credit, was only reporting $120,000 of income, and he was buying his fifth investment property. Okay.
Yeah.
So remember, every $30,000 that you earn means you could borrow 100,000.
Right.
So this guy is reporting 120,000. So in theory, he's able to borrow 400 grand.
Right.
Right. Now you take a look at his debt load, and again, remember, every $400 payment that you have takes away 100,000.
Yeah.
Okay. So imagine all his mortgage payments on the other properties that he's owned. Imagine the car payment that he had, and yes, again, when we are qualifying for a file, people will say, well, how about the rental income? Yes, the rental income can add money back or income back into the file, but it's not going to qualify you if your debt load is taken away from your purchase power.
Right.
So there was no way that a bank or a credit union was going to do this. And it's funny because he waited 6 weeks for a big six bank to come back to tell him no. I could have told him in a discovery call within 10 minutes.
Right. That he wasn't getting
going to be no.
Yeah.
Right. So again, back to our other conversation is that guys, it takes 10 minutes to determine if you're going to be able to move forward and what type of lender you're going to be able to move forward with. If you are waiting weeks, even if you are waiting days, remember, you're the captain of the ship.
Run away.
So this particular client, again, a lawyer here in Vancouver. So we took a look at it, and it was very, very quickly to realize that, hey, this is just not going to happen with a bank or a credit union.
Right.
So we took a look at the gross business revenues. His gross business revenues were $5.5 million. Okay. So, and remember, he's only reporting 120,000.
Yeah.
Okay. So we came to him and said, you know what? This is not going to work with a bank or credit union, but this is going to work with a B lender because we're going to state your income based on your gross business revenues of 5.5 million. Okay. Now, again, when we took a look at this, he didn't have any credit issues, so that didn't factor in.
Yeah.
All in this particular file, the only issue that he had was he just wasn't reporting enough income to carry all his debt load. And
Right.
again, he wasn't reporting the income because as a tax strategy,
Right.
basically he wanted to marginalize his personal tax.
Absolutely.
Right?
Yeah.
So Alistair,
Smart
guess
thing
how
to
much
do, by
we
the way.
had to state his income to make this file work?
How much?
$500,000.
Really?
So we had to state his income to be $500,000 to basically make the purchase work in consideration of all the other properties that he had. Okay. So then people will say, well, what was the rate? Great question. The rate when you're stating income with a B lender is typically 1% to 2% higher than what a bank or a credit union is going to give you.
Yeah.
The other thing to keep in mind is when you are working with a B lender and say, for example, you are stating the income, or even if you're working with a B lender for whatever reasons, you're going to be paying a 1% lender fee. And then at times you're going to be paying a broker fee of anywhere from 0.5% to 1%. Okay. Yeah. Now, the reason for that is that the B lenders do not pay you a premium to the broker when you are basically working with a B lender. Unlike a bank will pay the broker and then there's no additional fees attached. When you are working with a B lender, they're going to charge you a 1% lender fee, and then the broker is going to charge you a fee on top of that typically. Right. Then people are going to say, Alistair, well, I don't want to pay that rate. I don't want to pay that fee. And then I will always go back, well, what do you think your personal tax bill is going to be if you had to report, in this particular case, $500,000? Right?
Yeah.
And let's talk about, remember, when you are being self-employed and you're trying to get qualified based on what you're reporting for income, you need a 2-year average. Yeah. So now, what is that income? What is your tax bill going to be on that 500,000 for a consecutive amount of years? Right. It's going to be insane.
Yeah.
Right. Yeah. So it's going to be a 6-digit tax bill.
Yeah. It's 42%.
So what do you want to pay? Do you want to pay a small fee?
Right. Or
pay our interest rate that's 1% to 2% higher? Or do you want to pay 42% of your income?
Yeah. 42% income.
Right. So again, when you do that math, as far as the cost of borrowing, it's a lot better for that particular person to pay a higher rate, 1% to 2% higher than the bank, pay a fee, because again, imagine the tax bill on reporting 500,000. Now you can even marginalize it down and say your tax bill on 100,000 or 150,000 or 200,000.
Right.
When you do the math, state and income makes a hell of a lot more sense than reporting a higher income, paying tax on that higher income just so you can get the best rate or a lower rate and not pay any fees.
Right, exactly. And I think that's again, the importance of doing this pod, because it's not broken down for people that way. So you get boggled by rates and everything that you think you're supposed to understand, everything you think you're supposed to know, everything you think is supposed to be important, right? So you get confused by it all. And nobody's there to actually break it down for you. So it helps it make sense to you. And it shouldn't be expected that that person do it for themselves. It's not their job. They're not the expert, right? That's our job, to educate them and help them understand. And so that's always been my frustration, is if you're not getting that education, you're talking to the wrong person.
Yeah.
Just stop talking to them. Say, thank you for wasting my last 20 minutes. I'm going to go find somebody that can answer my question.
Well, and let's be honest, like even being a mortgage professional, which again, I always say there's 18,000 mortgage brokers you can choose from in Canada. Yeah. And 16,500 of those mortgage brokers are absolutely useless. Right. They don't understand business for self financing.
Yeah.
Your friends who have a job don't understand business for self financing.
Right.
This is a very unique product that is available for business for self people that are either not reporting enough income to qualify based on their 2-year average, and or have some credit challenges, and or have high debt utilization, right? This is one of those niches that you need a true mortgage expert to understand. So again, if you are self-employed, at least it gives you a financing option rather than just hearing the word no, because you're not reporting enough income, or no, your credit score is too low, or no, you don't debt service because of the debts that you have.
Exactly. When you hear no, ask why. Ask the questions. And if they can't answer it, go get the second opinion. It's just like a doctor, right?
Yeah.
Get a diagnosis from a doctor. Don't always take that as your diagnosis. Go get a second opinion.
Yeah. Yeah.
Right.
And again, this pod designed for the business for self people.
Right.
If you are working, you cannot state your income.
Exactly.
Mortgage.
Right.
Okay. This is for the sole proprietors out there. This is for the incorporated business owners out there. This pod is designated to the self-employed.
Right, exactly. So and that's why I love it, is because we've got a lot of realtors. My new agents in my class are now listening to it. So it's amazing, right? They've already been able to take insights from us to go talk with their clients about and all that sort of stuff. And that's what I mean. That's what this is all geared towards, right?
Well,
It's
yeah, exactly,
education
exactly.
for everyone.
Even on the real estate side, like if you are working with clients that are self-employed,
Which is a good.
you also can say, hey, just so you know, when you're working with your lending partner, if you're not qualifying based on what you're reporting for income, make sure they discuss the stated income product for you as well, right?
And if they say, huh, I'm talking to the wrong person. Right?
Exactly.
Huh
Exactly.
is a bad answer.
Yeah. Yeah.
Amazing. Amazing. Well, my man, I mean, this was a great pod. This was a great day. Thank you so very much as always. Yeah, I got to bust out of here. I got to get back out to Newton Athletic Center to go watch my son's game. And then this weekend, I'm actually out talking about helping. I'm actually running out to a client of mine. She unfortunately suffered a passing in her family. So they are going through the unenviable task of getting everything set up to run through probate and stuff like that. So I'm running out boxes and stuff like that. For me, it's not the real estate agent hat that I have on today. It's the friendship hat. This is the friendship support hat. So I'm running out boxes and stuff like that. I told her I'd do whatever she needs done because she lives out on the island. So
Right.
it's really hard to get a lot of this stuff done. So this is all, going out just to make her day, just to make her happy and feel like she's got that support, right? So
Give back, give back.
it's what it is. Giving, man. Giving makes you feel good.
Yeah.
It really does. Amazing.
Well, that being said, make sure our listeners, we're now on Spotify.
That's right. So everybody, again, before we bail out of here and I let you guys go, again, please listen to the pod, subscribe to the pod, Spotify, Apple Music, and wherever you get your podcast. We are everywhere. You can't help but listen to us. So it's a good thing. Amazing.
Share.
Share, like, love, and subscribe, everybody, because we love your insights. And hey, if any of you guys, again, are music people and you want to create some sort of an intro so you don't have to listen to dead air before this sucker starts, feel free. We're always willing to listen and love it. So, and also, please give us your feedback on the pod too. We want to get better. This pod is for you. So the better that we can be for you, the better it is for you. So we always appreciate you guys reaching out and letting us know how we're doing so we can be better for you guys. Love you guys. Amazing. Jeff, my man, thank you again for everything. We'll chat at you guys next week.
Yeah. Hey, next week we got a special guest.
Yes, next week, Monday, guys. Monday is going to be the pod. We've got a special guest. I'm so excited. He's going to run us through the 2024 budget. And that was the thing that I was ranting on last pod. So I'm super excited to be able to rant again. So excited because it's a terrible budget. Amazing, guys. Jeff, take care and we will chat soon.
Y'all have a good day.
Awesome.